Well, traditional brick and mortar retailers continue to struggle this year amid fierce competition from Amazon. Fewer customers simply driving to the mall. But there are names, especially some of the big discounters, that have been outperforming lately. Look at this. In 2019, Walmart up 19%, Dollar Tree 21%, Dollar General 26%, Ross and TJ Maxx also soaring. But I thought the tariffs were supposed to kill the retailers. Joining us now is Stacy Widlitz, president of SW Retail Advisors, and I'm glad you're here, Stacy. 1 month ago yesterday, you and I did this.
We had our duel.
We had a segment. We talked about, is the death of retail because of tariffs greatly exaggerated, and could retail actually do well? And people said, no way. Look at those numbers. Tariffs haven't killed retail yet.
They haven't killed retail yet.
I put yet in there.
It is a key word. You got it. But also,
hedge my bets.
If you look at the group you just talked about, what do they have in common? They have in common value. So what do we know? We know that prices are going to come up in the second half of the year. So on a relative value basis for the consumer, who benefits? It's Walmart, it's Ross Stores, it's Dollar Tree. Also, Dollar Tree is going multi-price point, so they also can kind of ease the impact of tariffs coming in versus a single price point dollar, which it's impossible to kind of manage your margins. So yeah, all that group has value in common.
What's interesting, show those names again if we can on the wall, because here's what's interesting. You know, and I'm not knocking the media, okay? Because we are
Can't
the
knock
media.
yourself.
But I'm talking more the general. The tariffs are going to kill retail. Those names rely more on lower margin, cheaper made. I'm not offending them, but they rely on cheaper made goods, probably from China, lower margin. Aren't those the companies that should have been hurt most by the tariffs on these Chinese imports? Not the high end, but those. But look at that.
Well, you have to split them up. So yes, for Dollar Tree, sure, because they have that low price point offering, which if prices go up, cost of goods go up, they get whacked on margins, right? But then you look at TJX, by the way, that's holding inventory that's left over from department stores. They're getting all the goods overflow for stuff that didn't sell in Q1. By the way, there's a ton of that. Inventories were really high. So all of a sudden, they have all this good inventory that they can sell at the old cost of goods. So you kind of have to divvy up the category. And Walmart, traffic driver, they're still increasing their comps through traffic, not ticket. And that's the key to investing in retail long term.
But why is the market, the quote smart money, the hedge funds, they clearly see something in these names that says to them, retail is going to be okay through these tariffs.
I think
that the consumer is not, all we hear about is the consumer is going to get crushed because prices are up 15%. Clearly the market doesn't believe that. By the way, I don't believe it either.
Well, I think the smart money believes that, again, these guys on a relative basis, if prices go up in other places, they gain share. And that historically is what we have seen when there's significant inflation in consumables and other categories. So, and also some of these companies are growing their earnings mid-teen %, which is hard to come by, especially as compared to the department store space, which is just continually losing share to the likes of TJX.
So there are retailers that you see, Stacy, as you do a deeper dive as anybody out there that are still struggling. The tariffs are kind of just another punch in the gut. They're not the reason, but they just add a layer of pain.
It's another punch in the gut. And also, if you think about the second half of the year, as you say, the media is, this is all we hear about is price increases are coming. So I think consumers potentially in Q2 maybe pull forward sales because they're expecting price increases. So maybe that helps the current environment.
So maybe tariffs will hurt, but now everyone's sort of stocking up on their stuff.
Stocking up, and also the retailers are stocking up so that they don't have to pay the higher costs in the back half. But when we do see price increases in the back half, watch out, because then the consumer perhaps already spent in Q2, Q3, and then kind of put on the brakes.
But Stacey, we've also seen wages rise. A lot of states have a new $15 an hour minimum wage. There's a lot of hiring pressure, which is good for them. Salaries have gone up. Gasoline prices, they're up today, but they've remained fairly stable. There are some good things happening.
And that's great for the consumer, but it's not necessarily great for the companies that, by the way, now have to pay $15 an hour when their traffic's down high single digits like a Kohl's.